Yeah.
Feel your heartbeat and don't be scared, 'cause I'll be there. Yes, I'll be there. You and I, we can fly anywhere you wanna go.
Okay. What's up, YouTube? How are you doing? It's Friday, final day before the weekend. Are we gonna get some action before the weekend hits? Or are we gonna range throughout the weekend, as the weekend is usually famous for? But I think 2 weeks ago we had quite a spicy weekend. So hey, you never know. But most commonly, the weekend tends to be a ranging structure in the market. And yeah, we will see what Friday gives us, no? So how are you doing? What's up, YouTube? Did you caught the move to the downside? Currently, we are still ranging. So in this live stream, we will go over Elliott Waves. We got bearish and bullish CVD divergences on top of support at the moment. We will also cover Elliott Waves, of course, as it is quite interesting because basically the whole morning we've been going sideways, of course. So we'll deep dive into what that does with the probabilities as well, and also I like to elaborate a little bit more on the length of the move that we got to the downside and a wave 3 compared to a wave C, which is quite interesting as well. So yeah, we got stuff to cover, and after the Elliott Waves bit, we go into chatting, as we like to do, right? And maybe some trading psychology. And then I've recommended books already, like often or whatever. We'll see where the conversation goes, but that's up to you guys, right? Because I follow the chat. So, hey, let's move to the screen. Voila, there we are. And there I am. And there you are. Salute, gang. Jay, what's up? How you doing? Flotty, also here. Lucas on his treadmill. He has a treadmill underneath his standing desk. So each time I go live, he is walking in front of his desk. So basically, he's being more fit than probably most of us. I am standing, not sitting, so that's already a +1, but he's also walking while doing his stuff on the computer, right? So Lucas getting those kilometers in during every live stream. Yeah, Flotty Vegas, baby, exactly. I mean, I was watching the current free practice. I got up this morning, 5:30. I always get up at 6 a.m. I got up at 5:30, put on free practice, right? Half an hour earlier than usual. I put on free practice 1, Formula 1, 9 minutes in, fucking manhole, like the pothole or manhole getting off the ground, and Carlos Sainz's Ferrari damaged, and an Alpine damaged, and an Alfa damaged, and yep, session not resumed. But hey, at least we had a broadcast till like, I don't know, 6:15, 6:10, and then I went into Elliott Waves and the video of this morning. But yeah, free practice 2 is active, 1.5 hours, and yeah, I'll continue watching afterwards because it's 1 p.m. and you guys have priority. But I definitely follow Formula 1 already for very long, but it's nice to see a Grand Prix where the circuit is new for everyone, right? No one knows, and it's slippery, it's cold, it's interesting. Perse, what's up? Markline, Davey, nice to see you too. Welcome here in the live stream. And then we have Raymond as well. And I always know it is Raymond because he changed his name to X. I had a couple of questions earlier when I saw the name X. I was like, wait, your picture is Raymond's picture, but your name changed. But you can always change your name, your handle on YouTube. So good to see you. How you doing, man? So let's start. Elliott Waves, right? Elliott Waves, our specialty on the channel. If you have any questions, make sure to ask your questions. What I will do now is I will run through the different scenarios on the different time frames. I won't go to like the high time frame, like the daily, weekly stuff, right? If you want to know more about the cycle, macro, or the high time frame, everything daily up, daily, weekly, monthly, just go to the playlist on YouTube on my homepage where it says macro Elliott Wave analysis playlist or something like that. You know, you'll find it. But here we basically do everything below the daily, right? That's what we cover in the daily updates from basically the 5-15 minute to the 4 hour. And we're going to run through a couple of things. Before I zoom out, before I start on the higher time frames, I do like to say we have bearish CVD divergences and also bullish CVD divergences. And when we look at this move, it is very long for a wave C. gotta say, right? So in a wave C and then an ABC, and then you're going to be looking again for a move up. It is a very long C, but we have seen that more often. And also, if we think about an impulse 1, 2, 3, 4, eventually we want to see a 5 to the downside, right? And so far, this move is too slow to be a wave 5 to the downside. Of course, we had bullish divergences here, bullish divergences here as well. So yeah, it's very slow, increases probabilities to take the high, but we'll get to the local stuff in a second. So let's zoom out. And also, another reason why I like to be live, besides engagement, interaction, talking to you, everyone, I can also elaborate a bit more on scenarios so that you really understand where certain thoughts are coming from, right? Which hopefully helps you with your Elliott wave analysis on your chart, or just a general idea of why probabilities are the way they are. Because in every daily update video, at the end of my video, I always have the probabilities section, right? Which basically gives you an indication of, hey, based on the Elliott wave analysis, the higher probability move or scenario is that one at the moment, right? Based on Elliott waves, which then of course is based on my knowledge. So as long as I do a good job, things work well, which so far works very nicely since the beginning of the channel. So let's keep that up. But on the medium time frame, that's where we're going to start, and I can elaborate a bit more on the vertical lines as well and what we're seeing over here. So that is what we're going to start with. We have Marcus entering as well. Just posted a chart on Bitcoin here. Any chance the high could be in? On Binance, we have a new high on Wednesday. It wicked the high. I see. Let me quickly have a look, because that is always quite interesting. There's actually... So I've done statistics in the past. I guess NDS, that's you, no? Yeah, I see. So in the past, I have done statistics on this stuff as well. Wait, a new high? You got to take this high, buddy. The wick here. And that is I think it's a lower high, no? Just. But by all means, by the way, even if Binance would have taken this high over here, right? Because this is your relevant high. This high doesn't matter, right? It's about this one. Even if Binance took this high, other charts haven't, which increases the probabilities that all the charts will eventually align and take the same high. Probabilities are still higher for moves towards the upside in bullish continuation. I'll go over it in a second, where if any chart took this high, probabilities are higher, other charts will follow. On my chart over here, this high has not been taken, has almost been filled as well. There's a $1 difference between this high and this high over here, with this high being a little bit lower, but it is lower. So yeah, probabilities are high. You got a double top over here as well. Probabilities are high to still move up and take that high and move to higher prices, like that very interesting golden target box that we have been looking for quite a while now. So let's see how that is gonna work out, of course. Farshak Farouk also here. How you doing? And Nichu, sorry your message got retracted, but I'm doing fine, man. Thank you. Doing good. Busy week, as you may have seen, because of speaking. It's the media week in the Netherlands, and I'm a global keynote speaker, and I speak about gaming and all that stuff, screen time. So, busy week for me. Tonight I also have a presentation, so I cannot update you at 7 p.m. Central European time, because I will be in Barneveld in the Netherlands. So I'll be out and about. But it's been a good week. Your live stream lags for me all the time. After you made the comment, it works. Oh, there you go. We that's how we do. Now, I actually lowered the bitrate so that people can watch even better. The bitrate was... Oh, wait a second. Wait, that is 2000. Streaming... Oh, streaming is 6.8K now. Everyone, let me know how the stream is doing, because apparently I changed the bitrate on the recording, but not on the streaming. So let me know. If there's too much lag, I'm gonna change the bitrate. If there's not enough, if it's good, then it's good, right? So keep me up to date. Let's start with the analysis, right? Let's start with the analysis. So Elliott waves. There we go. Bullish scenario, right? Shared earlier. The reason I again switched to a double 1-2 scenario is because of what we are seeing over here, right? So we then have our 1-2, because we should not forget the structure that we have over here, which kind of looks a little bit like another 1-2, 1-2, 3, 4, 5, 4, 5, right? Which then eventually ends your wave 3. So then we have a 1, 2, 3, looking for 4 and 5. Also the highs over here, you know, it's a weak high if you talk like TPO and order flow stuff, and it's a double top, $1 difference, very attractive to price. The move that we have to the downside so far is not impulsive. It's not a 1, 2, 3, 4, 5 wave move. It's all 3 wavy, right? It's all 3 wave structures. It's corrective, which means probabilities generally are higher to therefore take the double top eventually. Even if you drop, you still expect price to move to the upside, or you create a triangle, you know, WXYs, ABCs. We'll go over that when we zoom in. But generally, that is the idea in this bullish scenario. Target, right? 35.3, 32.2K. The key level in here as well, which is quite low, because for a wave 4, you do like to end somewhere inside this range, preferably not see the 05 in this particular scenario. 236 to the 382 is therefore interesting. We made a low over here on top of the monthly point of control, which is the point of control of the current month. That is where we bounced here for then this move to the upside to almost take the high, which of course looked very 3 wavy, which therefore gave me the probabilities for a move down, which is the move that we got here. Now time wise, we want to see wave 4 ranging still a little bit longer till at least the middle of the day, end of the day of Saturday, which is a minimum, but we can expect price to range longer also through Sunday. Because wave 4s, you know, like especially weekends tend to be wave 4 as well, also locally on the lower time frame. But compared to this wave 2, wave 4 preferably is longer, because that is most common in Elliott waves, right? Wave 2 tends to be short, simple, and deep in the retracement. And wave 4 in the rule of alternation therefore tends to be more shallow, complex, and long. So shallow, 236, 382, right, in this case. Long, preferably longer therefore than the 1-to-1, but it can even go to the 1.618 or the 2, you know, can be long. And complex, which tends to be structures like a flat, triangle, or a WXY scenario, with wave 2 most commonly being a zigzag in an ABC, which it very nicely did on the lower time frames. So the invalidation is if price would just tank now and do this, right? 0.618, 30.9K. You do not want to see that level being hit before price takes the high. In the bearish scenario, you eventually look for that to be taken. You're looking for 1, bigger 2, 3, 4, 5, right? Where now you have 1, 2, 3, 4, 5, no? And you're looking still for these highs to be taken, because all of these structures here, very corrective. We can go down, we can go up, it doesn't matter. Probabilities are higher for price to take this high over here. And the fibs are basically the same as the pull I just did, maybe a little bit higher here. Of course, everything is in blue, but you know what I mean. We're looking for this wave 4, where the 618, again, at 30.9 is the invalidation, and this is your area of interest, 35.3, 32.2. But currently, this scenario does have a lower probability compared to the more bullish scenario that I've just shown, right? So if we then zoom in to the lower time frames here, this is, of course, where things really start to get interesting, and we have the bearish CVD divergences here as well. So we go to this first. This was yesterday. Of course, it's a little bit of a repetition for now compared to the video this morning, but we'll get to the local stuff in a second, because once we start talking about this move to the downside, that is where the brand new info comes in, of course. So yesterday, and I do think this is important, because many people were looking for impulses, right, to the upside and higher prices to come. So why, when price was ranging here, did I favor an ABC? I think that is a very good question to ask, right? Because it looked all very bullish, no? But still the probabilities for me, and we also almost took the high, but my probabilities were still higher for a move down, which of course sometimes it's difficult for me as well, like to put a video online and say, hey, probabilities are higher for a move to the downside while price is pumping. You know what I mean? It's very easy to be like not wrong. It's all probabilities, right? 60-40, 70-30, but it's probabilities. It could have continued, but probabilities were higher for a move down. We got to move down. We got bearish CVD as well, which is what I specifically mentioned, which I like to see. If we move down, I want to see bearish CVD, which we got eventually. But the reason why I was thinking about an ABC is because of this structure, right? In the end here, we had an ending diagonal, which can also be the end of a wave 3, right? And then a 1, 2, 3, 4, 5. But my problem was especially this move over here for a wave 3, because if this is your 1, 2, 3, 4, 5, now what is the subdegree of this wave 3? Wave 3 has to be an internal 5-wave structure, right? And I was counting this, like, before making that video, I was like, okay, but how do I count this as a 5-wave structure? 1, 2, 1, 2, 3, 4, 5, 4, 5. I'm like, yo, that is a very long 5, and extended fifths are rare, not common. So I started to change, like, but wait a minute, 1, 2, okay, and then we got 1, 2, 3, 4, and a 5, 4, 5. Okay, so we have a 1, 2, 3, 4, 5, wave B to the 2, 3, 6, and then we can have more locally 1, 2, 1, 2, 3, 4, 5, 4, 5 in an ending diagonal. I was like, oh, that fits better. You know, it works better. It counts better because of this structure here in a wave 3 was a bit messy. So that's where the probabilities came from, not because of what we saw up here. It was actually because of what we saw down here, which gave me the probabilities for this to be an ABC. And because we are then thinking about this being a 3-wave structure, it really impacts the scenarios that you have in this range. Because here we were looking and still have the scenario of a WXY in mind, of a double zigzag. WXY. Double zigzag, ABC in wave Y, 3-wave in W, and then we have here another WXY in wave X. Again, WX. Maybe I have to put this on the chart shortly. So WXY here, right? But then internally, you have another WXY, which can happen in wave X. So we have a zigzag, flat, flat. So what you want to see as well, that's fine. But if this is a WXY here, this move cannot be a wave W. This move can only be a wave A. If this is a WXY, which currently does carry higher probabilities, which therefore gave me the probabilities for, where is it? Let me open it, for the flat. That is where the flat came from. So now I can explain to you a little bit better of how things come together, right? So because we were looking at a WXY here, you know, because a wave C here looks a bit meh. You can potentially force a C, 1, 2, 3, 4, 5, but it's not great. This wave 3, very, very, like lots of overlap, very messy if that's a 3, and then a 1, 2, 3, 4, and a wave 5. But if this is the end, and you have a B here and a C, 1, 2, then what? Is this your 3, 4, and then a wave 5 here, right? Messy, right? So that would be your A, B, and then this has to be your C. I think I had a certain opinion about this. If this is a 1, 2, 3, 4, and then a wave 5. I forgot what I said about that, but that's of course in older content. So that would be the way I would label this, an A, B, and then a wave C. But in a WXY, this has to be an A, which at the moment had the higher probabilities, which then means you're going to be looking for a B, zigzag, A, B, C. And that is why the flat came in with then a wave C down in a bigger A, B, and then a wave C to the downside, which is what you see over here. So this is the story behind the scenario. So here's your A. I removed the subdegree count because it's not important anymore, right? I want people that view the videos to focus on what's important. What happened here is not important. What's important is we label it A, right? In a flat for then a B and a C, but now you know the story behind it. B, 3-wave structure over here, right? That is confirmed, way too deep for a wave 4. If this was somehow a 3, 4, 5, right? price can't go all the way down here. So this is now a confirmed 3-wave structure to the upside, which therefore then can give us a 5-wave move down. 1, 2, 3, 4, but you're looking for a wave 5. Now currently this wave C, it started nice, right? And over here, when price was dumping, I was giving presentations as a speaker somewhere in the country, in Wassenaar for the Dutchies here. And so I didn't really follow anything that happened here, right? And eventually it's night and I go to bed. So I woke up to this over here, right? In the morning. Now, when price was moving down here, everything looks quite nice for a wave C, looking for a 5-wave structure, 1, 2, 3, 4. But we want to see a wave 5 to the downside, right? Price retraced quite high. We'll go into this move in a second. And if this is your wave 5, your start of a wave 5, it takes very long. 1, 2, 1, 2, whatever it is. Needs to be a double 1, 2, but usually that's wave 3 behavior, not really wave 5 behavior. Wave 3 is already extended because this is what we're looking for here. No? Sub-degree count. 1, 2, 1, 2, 3, 4, 5, right? Ending 3, 4, 5. Now, a wave 4 again can be complex, which kind of means that potentially this is not your end of wave 4, but it's one of these highs. And then W, X, and then a Y, for example, and then you move to the downside. Very much possible, right? This range that we have over here at the moment does not say, oh, this is already a wave 5, right? This has to be the high of 4. No, it doesn't have to be the high of 4, right? This can be a zigzag to the upside here, followed by a zigzag in X, and then you have again a flat. You have an A, B, and a wave C, which took the high, so it can be an expanding flat, and then a W, X, Y, where wave Y does not take the high of W, which therefore means that the high of your wave 4 can be very much on that spot as well. So it's not always the high that is the end of a structure, right? It can be very much this structure where now you could be working on a wave 5 to the downside. And what is interesting is that we do have bearish CVD, but we'll get to that in a second. This is, of course, the more bearish scenario, bearish, because you expect a 5 to the downside and then continuation to the upside. But we are at support, right? It's not yet lost. We are ranging on top of support. We also have bullish CVD divergences, right? The bullish CVDs were first. The bearish ones were second, which usually gives probabilities to the bullish CVD divergences. Now, the invalidation for this being a wave 4 would be price moving up. So the official invalidation really is there. The 0.618. Do not like to see that one being hit. Right, invalidation 36.8k. So if we do get the bounce in, move towards the upside, there's your invalidation. Again, we are at support. There are bullish CVD divergences. Probabilities of this morning have not yet been changed, right? Based on what we see at the moment, there's no reason yet to change those probabilities. But I do have some extra information because this wave 3 here is nice and long. You take a trend-based fib from the high to the low of 1 to the high of wave 2. Toggle on the wave 3 targets and you'll see it's the 3 that it touched, right? In other words, wave 3 is extended to the 3 trend-based fib extension. All right, so let me actually put this on the chart. I'll put it in the folder as well for next time. So for a wave 3, this is an extension that you like to see, right? It's longer than the 1.618, usually a minimum target for a wave 3, and this is fine for your wave 3, and then a 4 and a 5. Wave 4 is very long now, or starts to get very long compared to your wave 2. We take a fib time from the low of 1 to the high of 2, put it on top of the low of 3. I put on my extension, and you can see that if this is your end of 4, right, then this wave 4 is almost 6 times longer than your wave 2, which is very rare, right? That's not common. Usually a wave 4 is like 3-4 times maybe bigger than a wave 2 max, but going to the 5.5 to 6 times longer than a wave 2 lowers the probabilities that what we see here is a wave 4, with another 5 to the downside to come. And this is also partly where the probabilities of this morning came from, right? It's also time related. We see how long this move up and down was, and here is where I uploaded the morning video. Time was already ticking. We're at support, right? But now we're already 6 times longer for 4, if this is the high of your 4. If your high of 4 is here, and this is the beginning of your wave 5, then your wave 5 is very long, because wave 5 needs to be compared to wave 1. Take a fib time from the high of 1 to the low of 1 and put it on the high that you have over here. And now you see the 1-to-1 here has been crossed already, like from 8 a.m. this morning in Central European time, that is. So already a while ago, of course. Now, if a wave 5, so wave 5 and wave 1, if wave 3 is extended, wave 5 is most commonly equal to wave 1, or they have a 618 relationship, meaning wave 5 can be shorter than 1, which is the 0.618, or longer than wave 1, which is then the 1.618, right? Which is this one over here, which it also crossed. Now then we could, of course, go to the 2.618 as well, which is still there, but we're just stretching the target basically, right? So if we go down, like Laurie says, it needs to be a quickie, right? Because it's taking too much time, and that impacts the probabilities. In the end, it's all probabilities, right? We don't know what's going to happen with price. Goes up or down, sideways for the morning. But what we see here at the moment lowers the probabilities that any move we could get to the downside is a wave 5, which increases probabilities. It then has to be something else, like a flat, right? Where you're thinking about an ABC, for example, over here. Yeah, that is currently the scenario for this impulsive structure. So time is becoming a bit of a thing. This high over here, wave 4 is 6 times longer than wave 2. Can happen, is very rare, right? It's not common that wave 4 is that long, but it can happen. So not zero probabilities. There's no certainties in trading. And we have the bearish CVD divergences that I like to show you, by the way, that we have over here, right? So we got the bearish CVD divergences here on the chart as well. As you can see, we got a lower high on price, but on yellow, here over here. I shouldn't take the high. I need to take the red candle. So here we are. And you can see, actually the yellow line is exactly the pivot. So you can see this little high over here is above the yellow line, right? So there's a bearish CVD divergence, lower high on price, higher high on yellow. At the same time, you can also see blue, higher low on price, lower low on blue, right? So there's a little bit of like a mix at the moment. If we quickly refresh over here, then more locally, you do see again bearish CVD building on yellow, right? So the more local you go, the lower time frame you go, the more important CVD becomes. So let's see what happens here, right? If price takes this high, the bearish 3-min CVD are invalidated. If I zoom out, you can see the bullish CVD on blue, higher low in price, lower low here on the blue line. Bullish CVD divergence, and that is exactly what you want to see when price is ranging at support, what it does at the moment, right? Support resistance area, value area low. Probabilities so far, as mentioned in the morning, have not changed for currently higher probabilities to move up, because this wave 4 is taking so long, and if wave 4 is in and this is 5, it takes so long, right? And the bullish CVD divergences appeared first compared to the bearish CVD, which is also something we at least have to take into account. Now, if price falls below support, that is when probabilities really start to change. So while we're live, let's observe what happens here, and then we can impact the probabilities as we go. But this is the impulsive scenario. What I do like about the impulse is that wave 3 extended to the 3, which is something you don't really see often for an ABC, which is this scenario, where you have your wave A over here, your wave B, and then your wave C to the downside, right? 5-wave structure to the downside, wave C going all the way to the 3 over here, right? It's not really something that you see very often. A less common target is the 1.618. The 3 is a rare target for a wave C. Now, John in the group did share a scenario where you could be like, hey, maybe a 5-wave structure is finished, where you have a 1, 2, 1, 2, 3, 4, 5, 4, 5 finished impulse in a 5-wave structure. So this is then a wave A. You go up for B now, and then a C down. Possible, but we'll get there once price is here, you know, and we observe how price then gets there. We can get a better idea of, do we get another C to the downside? It may be a bigger 535. At the moment, not yet something I look for, but I'm also an Elliott Wave counter that is very much using lower time frames and new information to impact probabilities overall. I'm not someone, you will never hear me say, for example, like, oh, I was first, you know, like, oh, I already had this triangle on my chart a month ago and it played out and it was my primary already. Who cares, right? No one fucking cares about who's first. What's most important is that you make use of the most recent price action to then give probabilities to what happens next, right? We think about the scenarios that are most likely based on the price action that we see locally. We have a triangle, we have WXYs, we can have all sorts of corrections on the chart and then afterwards shout, oh, we were first. No one cares about who's fucking first. It's about who is right at the moment price is forming, right? So we have over here potentially that ABC, but C is very long, right? We are at support, bullish CVD, but this is usually not really something that you like to see. Now we do have that triangle, if we talk about triangles, right? It is very early, that's also what I write. It's way too early, but because I got people asking about the triangle, I covered the triangle because I think it's important. So because then I can also talk about the triangle and certain probability. So it's way too early, right, to talk about the triangle. Anyone talking about the triangle, it's too early. You can't, right? As long as D is not in, probabilities are not higher for a triangle. You're going to be looking for either a WXY or a flat before you think about a triangle, right? Only after a wave D is in and you move in a zigzag to E, that is when probabilities switch. Triangles are not that common as people sometimes make them appear on the chart, because when you get a triangle shape, it doesn't mean you have a triangle from an Elliott Wave point of view. Because a triangle shape, what is the reason that many triangles get fake outs? Because it's not a triangle. It's a WXY scenario where you're then faking out both sides before the actual move happens. So thinking about a triangle now as a primary, it's way too early, right? We got to first observe what we get here, and then we can talk about a triangle. Now, in general, if you're more of a swing trader, yes, probabilities are higher that you will bounce over here in this area, right? Between the 236 and the 382 if price would come down, but at least the 236 has been hit. So this could already be the low, and then you're going to range, yes, because probabilities are higher for a wave 4 and then another 5. So the probabilities are higher to take that double top. But the shape in which this wave 4 is forming, or the corrective structure of this wave 4, is unknown to everyone because no one knows. We only know that a wave 4 tends to be more complex in a triangle or a flat or a WXY scenario. And based on the new info, we get to the probabilities, right? So a triangle, it is too early to call anything triangle related at the moment. Besides, we have a wave A, we have a wave B. Wave A looks also WXY-ish, which is not allowed. Can we count a wave C in here? Yeah, we can, you know, a bit of like playing around. Yeah, wave A can only be a zigzag, A, B, C, and at the moment it's too early to call because there's still the WXY scenario here as well, which is not allowed in an A. It is allowed in a C or a D, but not in an A. So let's see what happens with that scenario. No, let's see, what do we have here? Oh yeah, W, yeah. I did cover this shortly in the video. If for a triangle, if you have a triangle, this needs to be an ABC, and if this is an ABC, then you can also make it a wave W. That's the reason why I have a WXY on my chart. Because if you can label this ABC, you can label it W, which means you can have an X and then you can have a Y in a flat, or you can have a Y in a triangle for the rest of the weekend. Then you finish Y and then you move to the upside. We have bullish divergences between this low and the higher low as well, right? Target is this high, the double top over here. So potentially a local triangle over here could be an idea, no? But yeah, again, it's way too early, right? We only have your wave A here. So you still need a wave B, right? B, C, D, E over the weekend, and then you continue to the upside. Finally, then the range. We are at support still. We have a 1 hour order block as well, acting as support. This little 1 hour candle here in red, right? You can see acting as support here together with the value area low, general support resistance area. Very nice indeed. We had support on this daily, which I moved into another folder somewhere. Of course, now I have no idea in which folder. Oh, here we go. Here's the daily. So that was the support, 35.5. And this move bounced on the, let me show this one as well. You can put it on your chart if you like. The monthly point, oh, it moved to the upside because the point of control changed based on the new info. But anyway, moved on, was on the point of control of the month, which now moved to the upside. So yeah, acting as support nicely. Now we're above the current weekly point of control as well. So some point of controls and stuff that I like to keep an eye on throughout the week, throughout the month. Of course, early week, early month, those levels don't matter. But once you get, you know, halfway the week or 50% of the month, that is when it does matter. We have this order block here on the 1 hour chart as well, but you can see we wicked above, which if we go up to the time frames, you can see we got a 4 hour gap. This gap here. And that is important because on the 4 hour, we now touch this gap for the first time with this candle. The moment price comes back and starts to close candles here, right, inside this gap at the beginning, or by all means, if price comes back towards these highs, probabilities are high to fill the gap to the upside, reach the point of control, because where the point of control is also the high of the gap, right? So that is your first target to the upside. If price comes here, probabilities are high, we're going to go there. Fill the gap that we formed on the 4 hour chart. And then just above, we have some more resistance. It's literally just a range that I have on my chart. No, I have a support area, I have a resistance area. Trade the range until it breaks. No financial advice, but that's of course a common saying in the trading industry. Now, for the ones that have been here, sticking around for a while already, you know I enjoy gaps, so it's an important one to keep an eye on, in my opinion. Finally, CVD. Then we're really done. We had some bearish CVD here towards the downside. Now, funny enough, my AGGR in the morning didn't work. It was bugging out. So I had no idea we had bullish CVD as well. But we do, which you can see here. In blue, high-low price, lower-low on blue. But we also got bearish one, lower high on price, higher high on yellow. So we got a mix at the moment. Blue one was first. Usually the first one that appears has a higher probability of playing out, which would in this case be the blue one. But now that we are at the chatting section of the stream, let's be patient and see what happens, right? And then another one thing, sorry. Over here, we had a little higher low. The probabilities were high to take the double bottom here for this reason, which I posted in Discord. We touched the 886. Now, if you touch the 886, the first thing you got to think about is that any move to the upside from the 886 has a higher probability of being a wave C or a wave Y, meaning probabilities are higher to go down, take the double bottom eventually, because a C or Y is corrective, and then you move down to take the double bottom. We moved down, took the double bottom, moved up, and now, yeah, we got bearish CVD and also bullish CVD. So let's chill, see what happens locally, right? And yeah, this is... Wait, let's, by the way, go to the probability section. Of course, it's very, very ranging here as well. But probabilities, we are on top of support. We got bullish CVD that appeared first. We have the bearish impulse here where if wave 4 ended here, then your wave 5 is currently taking a very long time to form, which lowers probabilities of it being a wave 5. If this is the end of your wave 4, then your wave 4 is 6 times longer than your wave 2, which also is not really what you like to see, right? It's not that common that that happens, which increases probabilities for a move to the upside. If price loses the support resistance area, the first thing I'm going to be looking for is, of course, price moving down, where then we have a little bit of support resistance here, but actually I should remove this. This target box has already been touched. I'll leave it on for now. It's been touched once already, as you can see. Now I'm going to remove it. I don't like, usually when things are touched once, I remove them from my chart. But then we do have some support here, 34.3, 34.5, 33.8, 33.9. So yeah, this is currently where we're at. Hopefully, you know, based on the content in the live stream, I can explain to you more of the thought process, where probabilities come from as well, which of course eventually is based on Elliott Wave theory. And yeah, hopefully you find that useful. Now we just wait and see what price does, right? We have to wait locally because we have bullish and bearish CVD divergences, which is a thing. Because the bullish CVD appeared first, but more local CVD, meaning like the 3-minute stuff, is very important. And here we do have bearish CVD. So you want to invalidate this, because the more local CVD also has like higher probability. So yeah, it's an interesting moment on the chart from a CVD perspective. So yeah, there you go. Let's see what you've been up to. Let me actually get my bottle of water. Makes me think, by the way, that this move up, right? Not yet sure if this is an A wave or more like a corrective structure. I guess it's something we'll find out when price breaks out here. But that is like 5-minute, 3-minute counting. That's something John loves to do as well. He's very good. He counts in a Discord, always posts his chart, so you can have a look. But yeah, let's be patient. Okay, what's up? How you guys doing? Coinbase on Binance, it did, yeah, the highs. So yeah, if Coinbase did, or Binance did but Coinbase didn't, it even increases probabilities you're gonna take the high. Could be useful to use CPR to find some confluences with Elliott Wave targets. CPR, wow, it's a long time ago I heard the word CPR. I used it in the past myself. I think that's the dots, right? The horizontal support resistance, and you have the weekly CPR and a month. I believe it was that, like the daily, the blue dots and the green dots. Look, anything works. What I recommend is you have your Elliott Wave theory. You use Elliott Waves to find areas of interest, because usually with Elliott Waves you get an area of like, you know, a target area, but then inside that area that you identify, you can look for additional confluences in that area, and then potentially trade from those confluences if all of your rules are checked and all of your entry requirements are checked. That is when it can become interesting to enter, of course. But that, yeah, you can use CPR. I mean, why not? Any strategy can work. So I use Elliott for this cool example. Many people tend to use Elliott Waves with RSI, but I don't like RSI. It's just not an indicator that I click with. I can read it, but I don't like it. It doesn't give me the most valuable insights or info. And that is why I like CVD. So I use Elliott Waves with CVD in some way. It does influence my counting. But with CVD, what I'm looking at with the CVD line is you're looking at market buying and market selling. It's what happens in the market right now. It's not a, like RSI, it's not a momentum indicator, right? This is market buying. You can see what happens in that candle. by looking at the line. And that is what I really enjoy to see. It's the most up-to-date price. It's not a momentum and that sort of stuff, because I want to know what happens now, like people buying and people selling, and I use CVD for that. You can also use order flow, but I don't need order flow to read what's happening, because I have so much experience with CVD. So yeah, CVD is my my thing. By the way, look, I was watching here. Yeah, here also wedding suits. By the way, I was looking for need groomsmen suits. So I was like checking different websites and all that stuff recommended by friends. So yeah, I got lots of tabs going on here. So yeah. Kavin Kavya, how are you doing? Good to see you. QZ World, I'm doing well. Thank you. Hope you're doing good as well. 34.4K weekly naked point of control all the way to 40K. 34.4K. That is correct, I believe. Where is it? Yes, that is correct indeed. 34.4K weekly naked point of control. These are very important. Talking about weekly naked point of controls and how good it is to have these on your chart. The bounce that we got here was on top of a weekly naked point of control of this area here. And it was a touch again to wick the first touch, and then you move towards the upside. And we had another one, I believe, over here, where again you touched it and you lifted off. The weekly naked point of controls are very good to keep an eye on. Absolutely. You can find these point of controls in many different ways. You can go to my YouTube channel. I mean, you're already there, but if you go to the channel and you look for the word naked, then you won't find any funny videos, but what you will find is an educational video. Where is there we go. It's one of the first videos I ever uploaded, so I got a nice little paint thing here, right? Thumbnail. How to trade naked point of controls using volume profile. And here you also learn how to find weekly, daily, monthly, yearly point of controls that I think are very, very useful for additional confluence in your support or resistance areas. So I can only teach what I use. And as you see, I tend to use daily naked point of controls and the weekly ones and all that stuff. So yeah, it's great. Share my views in your Bitcoin TA. Let's have a quick little peek. So your red count is the macro bearish count, where you go to 42, 43, and then see down to probably below 15K. That is still a scenario, right? That's a macro bearish scenario. Your white count, where are we? 3. Wait, this is your other one. I would recommend using the object tree though, because now you have like 5 scenarios on the chart, which makes it a bit complex, because you have an ABC going on here, but you also have a 5-wave structure going on, and you have the green count in a 3, 4, 5 going on. So then the question is, what are you looking at? What is your scenario, right? What is your highest probability? It's very difficult to know. You have your ABC here, which then is part of a bigger ABC. So I would recommend to put some stuff in folders like I do here, right? Put your scenarios in folders that are working together with one another, which will help you keeping the chart organized, and will help me and others to know what you're actually looking for, because now you're looking for everything. So with the question you have here, what do you think? Well, I think that one of these scenarios will play out, right? Or at least we will go up, we will go down, or we go sideways. But it's not one scenario, right? Now, when we look more locally, 1, 2, 3, 4, 5, you don't want to have overlap between 1 and 4. So the green count is something I wouldn't be looking for. That for me is an invalidated count. Especially wave 4 ending below wave 2 here is not allowed. Then you have the ABC, which is still a possibility for a flat. Wave C below A, that's a possibility. This being a wave 1, 2, 3, 4, 5 is not what I'm looking for, because this move to the upside as a wave 1 is a higher probability of being a 3-wave structure, not a 5-wave structure. Yeah, wave 4 in white ending here, with this then being 1, 2, 3, 4, 5 is also, yeah, it's not really, because you gotta, if this is your end of 4, then how do you count 5 waves at the moment to the upside, right? So everything needs to work together, and that is where the folders come in, that you know, they will help you out. So I like that you're counting. I love to see that you're thinking about different scenarios, because that is Elliott waves. What you're doing is important. You need a bullish and a bearish scenario, right? You need an up and a down, but then you need to give probabilities based on what you think, and the highest probability scenario that you put, you know, based on your analysis, that is the one that you want to follow as an Elliott wave trader. And you trade your preferred scenario till the moment it becomes invalidated, and then your alternative becomes your new preferred, and you make a new alternative, right? That's how you constantly keep going. Eric Dorion Laflamme, beautiful name. How is the 1.236 and the 0.618 beside each other? What do you mean exactly? You mean fib time, or? Because in fib time, you don't tend to use the 236. You use like 0.618, 1, 1.618, 2, 2.618. So this is probably maybe more Fibonacci related, but I don't know the pool. Can you look at render? Not today. Not today. I only have time to go over Bitcoin and chat with you guys, and then you know, I stuff to do. Got to give another presentation tonight as well, so I can't provide you with an update, unfortunately, at 7 p.m. because I got to speak at an event as a keynote speaker. So yeah, I'll see what happens the rest of the day, and then tomorrow morning at 7 a.m. a new update is expected. Are you in a long or a short? That's something that Diamond might know, but no, like I never, it doesn't matter what I am. I never answer these questions. I am in a position, but I will never say in what position I am, or what I am trading, if it is my main or my alternative account, like, because it doesn't matter what I do, because I have my plan, I have a strategy, actually, like strategies, one can say, and you need your way of trading. You need to build your strategy based on statistics, and then you got to trade your strategy. And then what happens is, as you start to trust and build statistics, like you start to build statistics on your strategy, you start to build trust as well. You're never going to ask these questions ever again. 100% sure. Because then you realize it doesn't matter what someone else does. What only matters is what you do based on your analysis. And usually these type of questions come from not having a strategy, not having a plan, following other traders that are constantly profitable and, you know, hopefully profit with them. But it's not the way to trade, right? You need your own plan and strategy. It comes from not knowing statistics, not having a strategy, usually. And I will never say if I'm long or short. You also have never seen me share any of my positions in a YouTube video, because it doesn't matter what I do. You know, you got to focus on what you do. I'm not one of the moon boys that says, hey, look at my 5 million position. I'm at 200K with 50x leverage in profit, you know. And then when you zoom out and you actually check out all their calls, yeah, it's a funny. Check some of those videos with like the moon dude and what's it? The people with the faces, like, you know, those on all the screenshots. Check these out. Yeah, not my style. Yeah, in that sense, I'm quite like a private guy. I love sharing all the analysis, but all money and position related stuff, you know, that's not worth sharing. Which gaps are the best? 15, 30, 60 minute. Depends on, yeah, I mean, all gaps can work, but you got to find the gap. So in this case, we have a 4-hour gap here. because if you look at the 15-minute here, right, you can't see, we don't really have a nice long 15-minute gap, right? So then you zoom out and then you see the 4-hour gap, and that one becomes relevant. So gaps can work on all time frames. It's the context around the gap. I think we going a bit higher in lower time frame. Yes, that was the higher probability scenario as well. So I agree with you. Which are the best chart for Elliott Wave strategy? Well, that's actually a very good question. Now, I personally use Coinbase for my counting, but mainly because my personal developed trading strategy works best on Coinbase with the highs and the lows that the Coinbase chart makes. Somehow it works best, which I figured out by tracking statistics of highs and lows on different charts. And I noticed the pattern and used Coinbase ever since. My cycle chart is the Bitstamp chart. And funny enough, many people always comment, oh, you're not using the index chart. I know, but it doesn't matter because it doesn't change the overall scenario. I think maybe Sunday I have to remind people. So I use those two, Bitstamp and Coinbase. But it doesn't really matter what chart you use. If you do counting on higher time frames, you can use any chart because the low time frame messy stuff falls away. When you count the lower time frames, try to find charts that are not wicky. You don't want to have those random scam wicks because it makes counting very difficult. Because Elliott waves also include the wicks, right? So yeah, try to find a chart. Most of the charts are fine, but find a chart that's not like very wicky to the up or the downside, because it messes with your accounts and then also your mindset, because you're going to be puzzling like, hey, what is this like thing about, right? What is this wick about? Good question. So yeah, I use the. When it comes to CVD, what are the time frames that you look at? 3, 5, and 15 minutes. Those usually 3 and 5, those are my favorite two. 3 and 15. 15 is my number one. And then I like the 3-minute to observe the reaction when we arrive at support or resistance, or we have a wick over here to the downside, right? I like to go to the 3-minute, and then I like to see like what is happening on a lower time frame, more locally. Now over here, I did not see this low being made at the time because I was speaking, but I like to keep an eye on the 3-minute CVD when price is hitting an area of interest. But after that, I like to zoom out, go to the 15-minute. Takes a bit more time for candles to form and la-di-la-di-la, but the probabilities increase for the CVD to be correct on a 15-minute. While the bullish CVD is about to play out, which is very nice because, it's what we're looking for, 36.6. Santos Science. Ik zit in meerdere internationale communities, maar in Nederlands alles behalve de makkelijkste. He says, I'm in multiple international communities, but the Dutch ones are all but the easiest. So more difficult, I suppose. But yeah, I don't know. I always enjoy international communities, different styles, different languages, different backgrounds. Yeah. It's nice, no? If the fiance come back to Paris, I propose a good friend could make a nice dress. She already got a wedding dress, which of course I haven't seen because I'm not allowed to. By the way, for everyone just joining, the analysis part is at the beginning of this video, so make sure you go there. We're now in the chatting section. We're going to marry in March next year in South Africa. So, because she is South African, has family there. So, she already has a wedding dress. She was with my mom and one friend when she found it. My mom cried when she appeared. I know, I haven't seen pics and all that stuff, but it was very emotional for my mom to be there. She really valued that. And she also already has a dress for her bridesmaids. But I still don't really have a suit for my groomsmen because damn, it is difficult to find proper suits, for the groomsman at the moment. So yeah, still looking. How do you like to spend your time after a win and after a loss? A significant one. Well, this is the good thing. A loss should be calculated, right? So of course you can have slippage, which can suck. But that's also risk management. If you know, for example, right, like if price is ranging here, right, and we would, in 5 minutes, we would get news coming in, right, like any big red flag news, like what was, where's my news thing? Where is it? I need it. This one here. So here, let's say 2:30 p.m. So in 25 minutes, that was on Tuesday, we're going to have news. And imagine I'm in a position here, right? And we got news coming in. I'm going to be very safe trading wise. I'm either going to close the position or manage it incredibly well to see what price does and the divergences and everything, because the slippage can be high when news hits. So I'm not really a news trader per se, right? But I don't know, after I have a win, what do I, I don't know. Like trading psychology wise, emotions play a big role in trading. If you win, people tend to be excited. If they lose, they tend to be sad. The trick is that eventually you want to get into a scenario where a win is normal and a loss is normal. But of course, if you win and you withdraw money eventually, you can do nice stuff with it. And that's how I like to, I suppose, treat myself, but mainly also others. Yes, I earn money, but I want to use it to have a good time with friends, family, my fiance. Every weekend, my fiance and I have a date day or a date night. So we're going to do any activities. Our motto together is let's make memories. It's in our engagement ring that I put in. It's going to be in our wedding rings as well. And that's our motto. And the moment I engaged or asked her to marry me, I immediately said that I have an idea. From the moment this ring, the moment we're engaged, every week we're going to have a date night or a date day where we do an activity. The one week you come up with one, and the other week I do one. And that is what I like to do, right? So yeah, I can have a winner, and whenever I withdraw money from the account, I like to spend it wisely. Of course, you have your house and you have your stuff, but yeah, I like to do stuff with people, build memories, and do fun things. So last weekend we went laser gaming 1 versus 1, and we did mini golf as well, which was really fun. And that's what we did last weekend. 2 days ago, we had dinner in Amsterdam. I had a business meeting at a place, and then afterwards, my fiance came after I had the business meeting to that same place, which was Luminaire in Amsterdam, which is a restaurant in the Hilton Hotel next to Central Station on the 11th floor. Very nice view over Amsterdam as well. So we had dinner there on what was it? Wednesday. Was that Wednesday? Yeah, anyway, it was earlier this week. I had a meeting with the dude. That must have been Tuesday. It was Tuesday, I see. It was on Tuesday. Yes, that's when I had the meeting with Sandy. So yeah, Illuminate. So that's what I like to do. And when I have a loss, yeah, it happens. When I have a significant loss, well, it doesn't really happen anymore, because I don't lose significantly, but I could lose significantly by having the wrong trading psychology, which is a different way of losing. My losses are calculated to 1%, right? I kind of always trade 1% risk. Now with slippage, maybe it's 1.2, or you market entry, market exit, that sort of stuff like TP. Okay, it might be you lose 1.1 or 1.2 because of the fees. Imagine, right? So yeah, it can be a bit higher sometimes with the slippage and stuff. But if I lose more than 1%, it has to do with psychology, not my trade that I had on. Because it might be psychology-wise that I re-enter, or I am in doubt, and then I go in and out and in and out and in and out, and price is not moving and I go in and out, so I pay fee. And if I then lose, I lose more than I wanted. Now, when I make a trading psychology mistake, I'm pissed, right? Because I'm like, that's stupid. Should have known. I need to control myself. Where's my book? Where's the book? Mental Game of Trading. Very good book. If you don't have it, I recommend it. So those are the avoidable losses, which is annoying. But there's no strategy in the world that has a 0% loss rate, 100% win rate, right? So a avoidable loss is annoying. And usually like when I do get into that state and I would mess up, eventually I close down the computer and I go do something else. I do sports, go outside. We have so much green in the area here as well, and forest and water, and there's so much. I go for a run to the gym. If it is, however, a calculated loss, which means it's just a loss based on your strategy statistics, 50% win rate, 60%, 70% win rate is still 30 losses, 40 or 50 losses. But you're going to be profitable at the end. If it's a calculated, well-executed loss, I'm happy. I don't care. Because it is a calculated, executed, good executed loss. And that's fine. Because you never know if your trade is going to be a winner or a loser. You play probabilities, you have a win rate, right? And yeah, you don't know. You enter based on your strategy. You tick all the boxes and you be like, yo, let's go, right? And it might be a loss, but your execution was very good. And if my execution is very good, but my trade turns into a loss, I'm a happy chap, right? Because I'm like, it's part of the game. And I know that if my execution remains consistent over many trades, I know I'm profitable because I know my win rate, I know my risk to reward ratio. Like in Diamond, people are trading this as well. Jarvis is doing a crazy, absolutely nutty job with the. Let's see if I can actually find it. With the strategy as well. I think he has currently with the strat a 70% win rate on the B+. What was this? This is November 8th. A little, I think he has more now, but yeah, here, around 70%. Yeah, pretty nutty. So yeah, I know my win rate, which the Diamonds trade as well. They trade the strategy as well, so I teach it. Yeah, and a 1-to-3 risk-reward ratio, around 60-70% win rate on a monthly basis gives you a nice, nice trading. So yeah, it doesn't matter. The calculated losses are that's fine. The avoidable losses, those are the problems. How 64-28 can be a wave A or W? Yes, in the 64. You probably mean Mod Alassi 69-15, no? Like the all-time high to the low that we have, being then a wave A or W. Yeah, wave A preferably, I suppose. Where then in the macro bearish scenario, you're going to be looking for a wave B zigzag to 40 to 50K, and then a C down to like 8 to 11K. We go to zero. Super psycho. The engineer, if he says it. What's up, Justin? How you doing? Sophos, is there any chance to do those lives on Twitch? I'm asking because on YouTube, if we're a different continent, basically live stream is impossible. I can only watch 144p. Jeez. Yeah, that's a pain in the ass. I mean, the problem is that on Twitch, the audience isn't there, right? Like you basically build a whole new YouTube channel if you go live on Twitch, if you know what I mean. Which is the reason that I go live on YouTube, as the people on YouTube like to see the analysis, which has been done at the beginning for everyone just joining, right? Going live on Twitch, I would probably play Trackmania Call of Duty. I used to be a professional gamer in Trackmania for 11 years, for people that don't know. If you look for Koens on Google or YouTube, you probably, for the ones that are here, you probably find this channel. But you also will find gaming videos. Look for Koens Trackmania. You'll find a shitload. So, but yeah, I on Twitch I probably won't really go live on Twitch as you build a whole new audience on the platform. And I like to focus on YouTube at the moment. But this is something that I will consider doing eventually. Or a multi-platform stream. So YouTube and Twitch, which can be interesting. I don't know, maybe I need a dual PC setup for that one. All right. Yes, that is correct, Eric Dorion Laflamme. And the reason for this is that in the lower probability, right? But I have to show you, in the lower probability setup, this wave 5, there's a couple of ways to calculate a wave 5. First, from the low to the high, the 1.236 to the 1.608 with a normal Fibonacci, and the 0.618 also a target for 5, taken from the high to the low of 3 to the high of 4. And you can see it was in confluence. Of course, this, as mentioned at the beginning, lower probability scenario, right? Higher probability scenario is a move up, fill the gap to the point of control at least, right? Yes, that is where the 0.618 comes from. Good question. Schlong, 34K, maybe. 34K, then B 37K and a C down. 34K, 37K, C down. A, B. I don't really know what scenario you're looking for here. If we're looking for a wave C to the downside, then it needs to be an A, B regular flat C or WXY. But then if this is a Y, it has to be a flat going. Yeah, I'm not so sure. Papa Live. Wait, Papa. You tagged me somewhere. I remember. I think I saw it, but I was busy making the morning video. I will reply to you somewhere. I don't know where it was. Discord? Discord, wasn't it? Where was it? Yeah, there we go. I remember. Okay. Let me ask question. I know how to calculate every wave, but not wave 5. There we go. 3 waves. Yes, there's 3 ways. Okay. Good question. Wave 5s, everyone. 1, 2. Wait, that's too long. 1, 2, 3, 4, 5. Most common target for a wave 5 is between a fib that you... Wait, let me put the thing on. Okay. You take a fib from the low of 3 to the high of 4. Most common target for a wave 5 is between the 1.236 and the 1.618. So I'm a little bit like, let's just do this. You get what I mean, right? So that is your most common target area for a wave 5. That is the first one that I will always pull. The second way of calculating is from the high of 1 to the low of 1 to the high of 4. So high 1, low 1 to the high of 4, where you're now measuring the length of wave 1 to the length of wave 5. You compare this with this. The 1-to-1 is also a target for a wave 5, right? And then finally, or actually not fully finally, but you can take a trend-based fib extension from the high of 1 to the low of 3 to the high of 4, and you toggle on the 0.618 target. And if you combine these things, it will give you an area of interest. Now again, most common is the 1.236, 1.618, right? So probabilities. But once that fails, or you want a bit of a bigger area, then you include the 1-to-1 and the 0.618, right? Wave 4, very rare, or wave 5 is very rare that it is truncated, that it does not take the low of wave 3, incredibly rare. So look for the targets that go below a wave 3. Right, that's what you'd then be looking for. You can also use a channel, which is something that you don't really see too often on my channel, to be honest. But you're then taking a channel for the high of 2 to the high of 4 to the low of 1, and then the low of the channel can also be a target for a wave 5. But yeah, you don't really see me using that too often. So those are Papa, the different wave 5 ways. triangle may play out. The golden pocket and 76 are in confluence with the POC and the value. Yes, that is correct. It's indeed a nice area of confluence. Absolutely. But it's way too early to call the triangle still, so we got to be patient. What's up, Dasa Gaming? You don't want to deal with messy wicks. Exactly. Wicks, by the way, W-I-C-K-S, if we talk about wicks here, is a wig. Is a wig not like a pruik for the Dutchies here? Yeah, these, like the fake hair, right? Wig, pruik. This is the Dutch word. You want to hear it? Let's see, sound is on. There we go.
Pruik.
Now you know. Pruik. Pruik. There you go. But yeah, wig, CK. But you're right, Avin Mouville. By the way, of course, like also English is not my native language. Anyone already, having another native language, speaking English, respect for speaking English, right? So, but I know what you mean, which is good. Can you explain how to find gaps in any time frame? I mean, how do you find gaps? I mean, you like so the gaps that I would usually look for is if you have a big push and then very soon after you get a red candle, preferably right next to the push candle, you get a red candle that, let's say, wicks to here, and then you have an interesting gap. One of the more recent ones was here. This was look, 50-minute. This was such a good gap, right? Which we spoke about so much. Price moving up, red candle continues. This is your gap, right? Because here you can see there's no slow structure. There's no overlap. We have one candle here and the next one is up here. So this one shot up. There's no structure. And the high of the gap is then very important because it acts as support, which it did before a continuation of the trend. Brilliant. That was very nice. So, and we have another 1 hour gap. If we go to the 1 hour, that is the key level that I have here, no? Again, candle shooting up. We have a little candle here, one big candle. Next is a red candle. We have a gap here, no? 32.5K. Very interesting indeed. So yeah, and there's more examples that I show in the content, of course, throughout the videos here and there. But yeah, here locally, look, when I currently look here. By the way, let's have a quick look how deep this retracement. Okay, so price hit the 886. It's common for price after an 886 touch to go to the golden pocket, which can then act as support. Any move from the 886 coming down now has a higher probability of being a C or a Y, increasing the probabilities that price will take the double top before going for new lows, if it would. No, but that's the probabilities at the moment. Just a little in between. But here, right, you can't really see like a nice gap. There's a lot of overlap and structure. And then at that moment, I like to zoom out. So I go to the 30 and I'll be like, okay, let's have a look. It doesn't really work. Okay, 1 hour. Let's have a look. Yes, we have a little bit of a gap here, but price already touched the gap, right? We had a gap, price wicked inside, moved down. So I don't really like, this is not a fresh gap. If you go here, you probably feel it to the high. So then I go up in time frame, 2 hour time frame. I don't like this. Why? This is not one candle. These are like two separate candles, 3 hour. Again, two candles here, right? Not to 4 hour then. Hey, wait a minute, 4 hour, that's nice. We got one candle over here, candle here, candle here. We got a bit of a gap. We touched the gap once over here, right? Touched the gap once with this wick. Got a bit of a rejection to the downside as well. But the moment you come back here, probabilities increase to fill the gap. This is where the probabilities to the point of control come from, where you're going to fill the gap to the point of control, where likely you're going to at least get some resistance, or potentially go back again to the support resistance area here as well. But yeah, this is like what you can, like for scalpers, this you can even use this on a 1 minute time frame. It really depends on like what you like to use, like here. This is probably more towards ICT stuff, I suppose, but range, grab the liquidity, move up, right? Change the market structure. This is FEG stuff. But eventually, where's your gap? Here's your gap. Where's your support? There's your support. So, yeah, it's... and actually, TXM, I don't know if TXM is here, currently here, but he has an amazing theory of why gaps works. Gaps work. Gee. So, yeah. I have a question. The wave 2 went only to the 382, which is shallow, but following the rule of alternation, if wave 2 was shallow, wave 4 should be deep. Yes, that is correct. But also time-wise, it should match, right? And now it takes a long time. Wave 4 deep means the 05, which in the bearish scenario, in the bearish impulse, it hit the 05. Not the 0.618 yet. But yes, you are correct. You are correct in the low time frame. I hope they told you about the cows. I know, right? When you marry. We're not doing that shit. By the way, sorry, I don't know if you can or want to talk about personal, taking the opportunity while chatting. I'd like to ask, what are your speeches about? You can actually see that. Everyone can see if you go here, you click on my name. I'm a global keynote speaker. I have a Dutch agent and a global agent. This is my global agent, and yeah, you can I don't know, you can find a lot more info. This is my book that I wrote, TEDx presentation, panels, speaking topics, biography here as well. You can see, I'm a very transparent person in general. You can find everything online, my socials even. So, if you look for my name, you'll find everything really quickly. So yeah, and I travel the world to speak at events. But in Q4, usually it's the Netherlands because of a lot of media-related things in Q4 of the year. So I talk in libraries, schools, conferences, congresses. Also globally, I spoke last year in America. That's where I engaged with my fiance. I spoke for Capgemini about survival in ever-changing environments as a company. How can you adapt to changing environments? Lessons from the gaming industry. As an industry, we have continuously adapted over decades, and now we went from an industry that continuously adapted to now becoming a leading industry where others are adapting to us. And there's many lessons to learn, right? And I help companies or provide insight to C-level executives on a global level on what they can do with their business to make sure that they keep aligning with ever-changing environments, right? The world around them is changing constantly. But what can they do and internally as well as towards the outside, what can they do to align themselves with the future clients and future technologies and new things coming? So that is one of my speaking topics. That's more global speaking topics. Also on a global scale, if I speak globally at global events, another topic I tend to speak about is how can you use the gaming and esports industry in like marketing, or how can you reach your target audience through the industry, which is of course a bit more salesy for companies, right? They learn something about the industry they can use in their marketing and sales. But my topic in the Netherlands, my speciality in the Netherlands and more globally, which is something I'm 7 years now involved in, is helping parents with gaming children, which is actually not something I think that's written here, is it? Yes, it is. The relationships, game well played. Should actually, I want to actually change this name to 5 a day. Play 5 a day. It's much better actually. Trends, introduction, personal development. But yeah, I have like my book, right? This one. It's a book where since 2016, based on the relationship I had with my mom in the past when I was a professional gamer. Since 2016, I help parents with gaming children to repair, retain, or reinforce the relationship with their gaming children. And we nowadays do that with a team, a company, and yeah, it's like, yeah, That's my niche, and I speak a lot in the Netherlands about this topic, especially how to cope with gaming children. But we're aiming to go English as well, and also I also speak about it across the border, but a bit less. It's very popular, like in the Netherlands. So yeah, there you go. I had a beautiful trip in Brugge. Brugge, that's how we say in the Netherlands. Bruges, very nice romantic place. There's top beer fish cooking restaurant. Yeah. Hopefully, Crypto Cloder, you also tasted the waffles and the chocolate. Prema Shankar Tananje, what platform do you use to trade? And if it's one of the exchanges, how do you set up to only work 1%? Because the only thing you can set is a stop loss and leverage. That is the calculation that you'll have to do, of course. Now, I trade on BingX. That's my preferred platform that I already use for a long time. In the past, long time ago, I started on Bybit, but eventually changed to BingX. And as I use that platform, naturally, it's also the partner of the channel. So if you don't know BingX or you want to explore BingX, we got a couple of cool stuff going on. Campaigns for the community exclusively, which you can find in the description if you're interested to become an affiliate or not, to support the channel. And if you do, then I thank you very much for helping out. And if you don't, and you Google yourself, that's also fine. And then, you might not support the channel, but hey, you never know. But that is the platform that I use. So so far so good. I just really enjoy the layout and what I can do on the platform. So yeah. And by the way, if you, at least on BingX, if you put numbers in the stop loss and the take profit level, you can see how much you lose or win based on how much your position size is. So if you have a 100K account, 1% is 1K. So if you put in your stop loss amount and stuff and you see, okay, you would lose 1K, it's 1%. So you can also do it like this, I suppose. But I have in my journal, I have a position calculator that I made myself. And Lucas, he's a Diamond member. He's an engineer. He's so smart. This guy made a whole calculator for dollar positions as well. You have to calculate it. Like any position calculator can work. So you need to know your stop loss percentage. How far is your stop loss in percentage? And you need to know your position size. And if you know your position size and your stop loss level, you can very easily calculate your position size for the actual trade. Because if you... Wait, can I actually... Yeah, let me show you this. So... Okay, so let me put an imaginary... Pop. Okay. So... Can I put this one out? New Excel sheet. There we go. Let me open this. And then let me move this. I'm going to show you. Poof. So here you can see this is like one of the tables of my journal, right? Like I have many. And we have an imaginary account with a risk, right? Now you want to know your calculation. So what you need is your risk and you need your stop loss level. Now where is price at the moment? We are at 36,470. So let's imagine we entered at 36,400. I don't know, right? This is imaginary. Now if your stop loss is 1%, what do you think will happen? You're going to have a Bitcoin position of 275, right? Because 275 times this is basically 100K, right? So you're going to have 100% of your portfolio included in the trade in a Bitcoin position. I also have the dollar calculator, but I actually don't have it open. Super Psycho has that one. So if you use 1%, you trade with 1%. So actually here, right, we could say, okay, you're going to have 100 grand. That was, of course, way too much. 100. So that's going to be your position. If you change your risk to 0.5, your position should become 50K, right? Don't look at the logo. I don't have my dollar calculation journal open, but this is the quickest at hand. So you're going to have if if you have a 50%, 0.5% stop loss, your position is going to be double, which means you need at least a leverage of 2, right? Because you need to make your 100K 200K, because your stop loss is 0.5%. If you have, let me make this actually easier. Let me remove this because it might add to more confusion than actually solution. If you have a 1% stop loss, you put in your full size for 1% loss. Any percentage stop loss lower than 1% will increase your position size to still risk 1%, if that makes sense. 1% stop loss, 100K goes in. 0.5% stop loss, if you want to risk 1% of your portfolio, but your stop loss is 0.5, you need to put in 200K. You need to double your position size to reach a 1% loss if price hits your stop loss. If you have a 0.25% stop loss and you want to risk 1% of your portfolio, you need a 4x leverage, because you now need to put 400K into your position to lose 1%. If your stop loss is 2%, right, so it's longer, now you can only add, like if you risk 1% of your portfolio, now you need to add less than your full position size. So now instead of 100K, you're going to put 50K in the trade, right? Because 2% of 50K is 1,000, which is your total portfolio size. So it's just math, really. But yeah, I use calculations in my journal, Super Psycho, with his magic journal as well. So it's just about calculating. So if you know your position size or your portfolio size and you know your stop loss, you can very easily calculate your stuff. I think this makes more sense than trying to explain the journal. Yeah, exactly, Papa. Yeah, sorry, I forgot to answer, but there you go. I just answered it. The other two I really... Yeah, there you go. Yeah, it's not too common, but you can use the other two. Exactly. Cheese Gotcha, US, Florida. And there he is again. What's up, Cheese Gotcha? How you doing, man? BTC hit the 886, correct. Probability is increasing for the bullish CVD to play out and price to take the highs, even if it goes down. Any move down is a C or a Y, higher probability for then a continuation up. Can you speak Arabic? No, I can't. I know ABC and WXY 1, 2, 3, 4, 5, but when do you use double 1, 2 or multiple 1, 2 like people were talking about in Discord? It's usually something that you see when a wave 3 is building. So a double 1, 2 is where you have an impulse, 5 waves up. You get a wave 2, right? Another 5 waves, another 2, another 5 waves, another 2. And then you get a big move. Commonly, you get a bit of a diagonal pattern where the second wave 1 and the second wave 2 are shorter in time and price. These moves, of course, have to be 5-wave structure, impulse, impulse, impulse. These are then corrective structures, which can be any wave 2 corrective structure. Preferably, you will see bullish CVD divergences somewhere in this example as well. And usually these type of things are visible when you're going to be looking for a wave 3. So you have your wave 1, you got your wave 2 finished, and then you have another 1, 2, 1, 2, and then you get a big 3 to the upside. So it's something that you can pay attention to, because usually after a double 1, 2 or triple 1, 2, you do expect a bigger move to come. So that is where you use the double or triple. we're not doing the alts today. It's only Bitcoin now. Position calculator is good, but slippage and fees is what is a bummer. It's cost of business for me. I don't really, calculate for that. It's just the cost of doing business. It's same as like I invest in marketing and I get sales out of my marketing. So But yeah, you can calculate this if you know the fees of your platform and stuff. But I just want a 1% position size as in a stop loss. And if my stop loss get hit, I accept the fees as just business cost, I suppose. Also with the take profit. What do you think? How likely that it will make double top from now? From now, this move up. I expect a continuation of the range for at least the weekend, and then we'll take it from there. But the probabilities are very high. Ooh. Probabilities are incredibly high to take the double top eventually. Not like this. I expect a continuation of the range, whatever the form will be, right? If we go into triangle or complex structures. But in general, probabilities are very high to take the high over here before we go to literally like a bigger corrective structure. Now, as you know, based on the analysis at the beginning of the video, the wave 4 target area is big, no? The 382 and the 236 are the mains to watch. The 236 has been tested, which is nice, right? So wave 4, the lower 4 could already be in, but you could still continue the range. Yeah, probabilities are very high. You're still going to go up further. Like going to continue to higher prices before you really get a bigger corrective structure down. But at the moment, I'm not necessarily looking at this to already go like all the way. So for now, of course, we have a move up. We're ranging here. That's all good. We're on top of support resistance. This hit the 886 now, taken from the high to the low. The 886 has been hit. So any move to the downside has a higher probability of being C or Y, meaning probability is higher to then move up again, to also take this double top now that we have more locally, high 1, high 2. And then the probabilities are very high to go to the point of control. So that is something that I'm looking for price to eventually move up, either this way or this way, right? After the 886 is touched, it's very common for price to move and retrace to the golden pocket, which is now moved below. So yeah, maybe we'll see a bit of a move down. We have some bearish CVD divergences, but generally probabilities are higher to move up because we have the 886 touch here, right? So something to remember. Bullish CVD as well. If price comes down, you just get more bullish CVD. But yeah, based on Elliott Wave's knowledge, because the 886 is Elliott Wave knowledge, right? Even if price comes down, probabilities are higher to go back up. Yeah, it's all probabilities, no? Marba. Marhaba. I understand now. I usually tend to trade Forex and other related stuff because I changed the position size and the leverage is fixed. I see. Yeah, it's whatever you're used to, of course. But any calculation works. Just know your position size, know your stop loss percentage, and then calculate it based on that. Venga Hombra. Come on, man. Good English is already top notch. Thanks. I appreciate it. What do you think of EMAs? I mean, people can use them and they can trade them. Absolutely. I don't use them myself, but any strategy can work, right? Anything. You can trade trend lines and be incredibly successful. You can trade patterns. You can trade order flow. You can make it as easy or difficult as you like, as long as you have a strategy with rules. So EMAs can be very useful if you have a strategy around the EMAs. It's not always, it's touch, so I buy. You need a strategy around it, right? You need a couple of rules that make you enter or not enter a trade when it hits an EMA or when you see something, right? You need a couple of confluences, check, and then you enter, right? So that is the... Yeah, that's I think that's the way to go in my opinion. So EMAs can be very good. Yeah. What book do you recommend for Elliott Wave theory? The Bible of Elliott Wave. Let me actually. Oops, where is it? Elliott Wave Principle. Frost and Prechter. It's probably the most or best known Elliott Wave book out there. Yeah, that's the one I have. It's a fun book, a lot of theory. First half I think is a bit better than the second half, but Yeah, if you want to know more about Elliott Waves, you can check out that book or check the free websites, just online websites in the description, because I actually put in the description where people can learn Elliott Waves. And those are the sources I use to learn. You can find them in the description, especially the detailed link, the bit.ly/detailed Elliott Wave link. Yeah, I think that's one of the best websites out there to learn Elliott Waves. Modality, still here since the beginning. What's up? Thanks, man. I appreciate your kindness. You also have a beautiful name, Koen Schobbers. Very Dutch, no? Very Dutch. Hard one. The J-hook pattern looks alike, rounded bottom. W, M, rounded bottom, cup and handle, diamond pattern. What do we have? Yeah, there's many patterns out there, of course, but oh wait, head and shoulders. But I don't trade patterns. But yeah, you can trade patterns and be incredibly successful, right? What's up, by the way, Adrian? When you hit the 886, you say it goes a lot of times to the 618, yes, and go back up. Yeah, depends on the reaction at the 618, yeah, the golden pocket. If it closes in the 05, how low could it go? Well, the low 5, like it usually, so let's put this on the chart for a second. I think actually recently, I don't know where it was. Somewhere here, I forgot where it was, but price retraced to a 0.5 and then it went back up. But it's all about probabilities. So when an 886 is touched, it will often go back to the golden pocket to try and find support here, right? That is most common. It can also bounce on the 05 and then move back up depending on other confluences, right? But the golden pocket is quite common. After 886, golden pocket, and then you either fly or you dip through, and then the 05 is next. But you know, if you lose the 05, of course, probabilities increase to go down. And if you look for, what was the second part? How low could it go? Well, because you now know probabilities are higher for this to be a wave B or a wave X, you can take a trend-based sub-extension from the high, right, to the low. But if this is a B or X, then we have to think, okay, this looks like a three-wave structure. Then we maybe have an A, B, C, or we have over here a W and an X, Y structure. So, you know, let me take it from the higher low. It's literally a few dollars. And then you put it on top of the high again. You toggle on the common target for both a wave Y and a zigzag, the 1 to the 1.236. And then this is your area of interest. And this area of interest is in confluence with the, I think the 05, or is it also a golden pocket? In between. So that is nice, right? That is nice. So you're still around the support resistance. Could take this low here as well. You have the 0.5. You have the golden pocket. And then any move coming down has a higher probability of being a wave C or a wave... Yes. No, it was correct. Any move down has now a higher probability of being a C or a Y, which therefore means probabilities, if price would come down, probabilities are higher to then move back up, because a C or Y is a corrective structure, right? So therefore probabilities increase for price to move back up. And it's all probabilities, but if you know these type of things based on Elliott waves, it can give very nice setups when you have other confluences in the same area that are building up, right? It can give you a nice idea. So yeah, the moment an 886 is touched, the first thing you got to think is, do we continue or do we go to the golden pocket? Quite often it goes to the golden pocket and finds support and continues, right? Then we're thinking about a more impulsive scenario. If it breaks golden pocket, and especially once it breaks the 0.5, probabilities increase to move down. You go to the target area for a wave C or wave Y, most commonly between the 1 and the 1.236, and you're going to try and look for support here and other confluences in that area if price comes, right? So yeah, it's just like a little bit of 886 knowledge I suppose. So, but we're not down here yet, right? We do have bearish CVD divergences, which we have to remember. No, the bearish CVD divergences play out if price takes this low over here, which is absolutely fine as well. And then the probabilities increase for a bounce somewhere in the area here. And it's all probabilities, no? So yeah, because for a wave 2, the 886 is a rare target, while for a wave B and an X, the 886 is a common target. And that is the difference between wave 2s and B and X's, and the 886 therefore as well. So you can see 886 is hit very nicely, no? Very nice rejection. And what's also a little bit of a trick with the 886 is, you know, breakout traders. What does a breakout trader see? Yeah, this is so typical as well. Eh? What does a breakout trader see? Right, they see price moving up, and they see a high volume candle going into the 886, and they're like, "Yo, we're gonna take this high. I'm so confident we're gonna take this high." So what do? They enter, expecting the breakout. And that is also why with the 886, quite often price rejects at the 886 and first moves to the golden pocket, making people doubt or go deeper in a, you know, C or Y. Because now people get stopped, no? Or they exit or whatever it is. And then later you go back up, but people might not trust it anymore. So it's all probabilities. You know, we're just trying to read price action. And then based on that, we try to figure out what price wants to do. But it's all probabilities, all probabilities. No one knows what price will do, but we can you know, play the probabilities at certain moments in time. So Mark Herrero, you do great content. Thank you. I appreciate it. Thanks for the kind words, guys. I trade SHIB following Bitcoin and Elliott Waves. While I'm learning from you and others, any advice on trading altcoins based on BTC? Yeah, I mean, no financial advice, right? But I personally would trade altcoins in the same direction as Bitcoin. So if you have a higher Bitcoin probability of going up or down based on Elliott Waves, I personally guess that I would trade altcoins in the same direction. Yeah. That's the only, I guess, thing that I would think of. Because and that's something that Rand Lelwa says often as well, is he also doesn't like it if he's long on Bitcoin but short on altcoins in Discord, which I agree. It's a bit counter, you know, you're countering the bigger coin, I suppose, Bitcoin. So yeah, that would be the only thing, really. Yeah. Greetings from Brazil. What's up, Mike? How you doing? A nice Grand Prix in Brazil recently, right? With Alonso and Perez fighting to the line, 53 thousandths between them. Very nice. Eric, by the way, my pleasure. Bogdan, what's up? How you doing? Mark Herrero. Is there any period in the year where altcoins move opposite or more freely? Can happen at any moment. Any time of the year, the alts can go opposite or move more freely. However, what is common in the industry, right, is when Bitcoin is pumping, yes, alts, they, you know, tend to at least move up a bit. But if Bitcoin is really bullish and tends to pump, then the alts tend to have slower moves. And then once Bitcoin starts ranging, that is when the alt moves. So usually alts can lag a bit, but then they come later, right? They get the moves once Bitcoin starts ranging, because people then get bored in Bitcoin, pull their money out, put it in alts and trade alts. And but in the end, it's very difficult to predict, like general industry stuff, like, oh, when is Bitcoin moving against alts or alts against Bitcoin? I see every pair separately. Completely separately. And also with my personal trading strategy, I don't care what other charts do. because I look for very specific things on a chart. If I can check all the boxes, I can trade. But I only trade Bitcoin, really. I don't really like to trade alts. But the people in the group in Diamond, they do trade alts very nicely indeed. So, yeah. Yo, what's up, Hamza? Most alts trade BTC/X and ETH. Yeah, like I know in Discord, like Jarvis with my strategy has now 70% win rate, which is normal, 60-70%, and he trades Rune, Ethereum, Solana, and Bitcoin. Then you have Samith in Discord as well, trading his own with MyStrat, and it's like he trades like, I don't know, he keeps an eye on like 30 or 50 altcoins. Rondelwa with MyStrat also trades like 20 or 30, or keeps his eye on many, 15, 20, I don't know exactly. So yeah, I mean, you know, it's whatever, also how much time someone has. Does it fit in your lifestyle to do so many charts? And also your portfolio size, because, you know, you might not need to trade so much. So you can have more time for other stuff. Thanks, Sahid. I got caught a few times with that lagging. Yeah, I know, right? Yeah. Also, SHIB, of course. Crazy story, eh? At the beginning. Holy moly. People say holding is better than trading, and trading in long term ultimately is a loss. Is it true? Worth learning trading? Depends on the person. I would disagree with the statement. The problem is that many people don't want to learn trading. They think that trading is an easy money grab. And they will be very disappointed, and they lose their motivation if they figure out that actually to learn trade and be a consistently profitable trader, you actually need to study. And you need to build a strategy, and you need to gather statistics, and you need to read. And that is when becoming a trader becomes a study, right? Like a university study. You can be a consistent, profitable trader, right? As long as you put time into developing your trading strategy. You can trade anything. It doesn't matter what you choose, but you need a strategy based on statistics. You need to know your win rate. You need to know your stop loss level. You need to know your risk reward ratio. What's the best, right? What's the best risk reward ratio for your strategy? I know mine. I know my win rate. I know my most profitable days. I know my most profitable sessions. I even know my most profitable hours. I know how my strategy performs against or with the trend. I know how long a strategy or how long a setup for my strategy takes to reach take profit on average. I know how long it takes for a strategy to form. Like, I have so much data, right? And that is what's going to make the difference. People tend to be lazy. They just want to enter because they see a red candle or some moon boy on YouTube shouts price goes up or down, right? They're too lazy to figure out trading by themselves. They just want to follow random people on the internet, which is never recommended. Also on my channel, I'm not a financial advisor. I'm just a guy that enjoys Elliott Waves and shares it with the world. And hopefully people learn Elliott Waves. If I say price goes up or down, or probabilities are higher for up or down, it's not my problem if you lose or win, right? That's on you. You press the button. You need a strategy. You need your own shit, right? So it's about people putting time in creating something, but most people don't. And those are the people that will lose consistently. So they might have a lucky win, but you can't lucky win yourself to 10 years of profitable trading success, right? You need a strategy. You need to work on your mindset and on your skill and, like the whole package. And that is where people eventually are like, fuck no, I go back to my whatever it is they do, right? So I think investing is smart. So hodling is smart, but only if you have a strategy for hodling. Because if you hodl and you hodled your ass, right? Like, this is a funny example. So if you are hodling and you say people make more money. Okay, right? So I'm buying here and I hodl. So I'm now hodling for some years. Did I make money? No, I'm at 50% loss, you know, and hopefully I'll have the balls to hold if you're hodling. But you could have traded and you could have learned something and put these years into actually learning something. But also, if you are hodling, you still need a strategy, right? You still need a strategy of, hey, when am I entering? What do I want to see on the chart? I know some people that do entries based on EMAs. I don't know if it's the 20-week and the 200-week and stuff EMA. But at least they have a system, or they have something going on, or they look at candles, market structure, Elliott waves, whatever it is, right? Which gives them entries to hodl, right? I can hodl over here, and after 3 years, I'm at break even. I'm like, fuck, I went all the way up, I went all the way down, and now I'm here. What the hell happened, right? You're not earning money by hodling. You're earning money by having a strategy. You want to hodl your ass up, and you want to know, what am I going to do? What am I going to look for to exit? What is my exit strategy, right? Because if you're here and you're hodling, yeah, you're in profit, but you went up, down, right? You could have exited and entered. Yes, you might not catch the absolute high and absolute low, but you need a strategy. So even if you're hodling, you need a strategy. If you're trading, you need a strategy, but build something that is that just like clicks for you, right? You need a strategy. High time frame strategies will be different than the lower time frame strategies, right? Usually, unless Elliott waves can kind of work on both. But and yeah, depending, maybe you're scalping EMAs and whatever not. But you still need a strategy as a hodler, right? Yes, you can have a portfolio that's there forever, right? You buy a little bit, you buy a little bit, you buy a little bit, you DCA, you DCA, you DCA. You're just like DCAing your ass into like Bitcoin, Ethereum, and all that stuff, right? You just buy. Your vision is going to be, I don't know, maybe 30 years. Fine, you know, long-term investor like S&P 500 stuff. But like, is this the best strategy? I mean, depends on your mindset, I suppose. Because I would have liked to have a strategy where if I enter, this is where Elliott waves is important on higher time frames, and I see weakness or a diagonal shape, I'm like, the moment I see market structure break and a retracement, I'm like, yeah, I think it's a good time to, you know, load some off. You get a big dump. Over here, we start to see bullish CVD, market structure as well, changing, impulse to the upside, right? Okay, you know, I might not catch the absolute low, potentially, but I can start to enter again and move up, right? And yeah, you need a strategy, right? And if you, I mean, for most people, I suppose I guess it's safe to not, how can I say this? Like, to just buy a little bit and a little bit. But who says that Bitcoin in 10 years is going to be 1 million? Well, I don't, you know, we don't know. We don't know. Maybe Bitcoin is zero in 10 years, but we don't know, right? Yes, probabilities are higher for Bitcoin to move up. But it's probabilities, right? That's the game. We're playing a game here, right? There's no certainties. I bet grandma, the dog, your nephew, the little kid of 5 years old, they bought Bitcoin here. Yo, they hodling. You know what I mean? So yeah, you always need a strategy. You need a certain plan, right? Even if you hodl, where you're gonna exit. Because some people are hodling their ass to like 70K, but they didn't exit because they get emotions. They're like, oh, we go to the moon, right? They follow the moon boy with their faces with open mouth, you know, recording videos with their mobile phone. The guys that are saying on the news on TV, yeah, Bitcoin goes to 200K. You know that? You remember when price was here, moving to the upside? And they were saying, 200K per Bitcoin by the end of the year. Yeah, by the end of the year, mate, we were down at 30K, my friend. So, yeah, just have your strategy. Man, I love ranting about that stuff, eh? Just have a strategy. It makes life very easy. But it takes time, because also hodling, you can lose money. Jeez. God, love a good rant. That's great, eh? Good old times, where I actually watch some of the videos. Good question, Saeed, though. Yeah, I went a little bit sideways there. Hi, will this pump last into weekend and Monday? If we can take this high, probabilities are high to move to the point of control. Probabilities in general are higher, by the way, to take that high. And that's what I actually had on the chart here. So even if you come down now, higher probability to be a C or Y, which increases probabilities to move up, where in general probabilities, let me just do this. In general, probabilities are higher to move to the upside, reach the point of control at least, also filling the 4-hour gap and go back to the support resistance area. Likely during the weekend, if we get this on Friday, I can imagine that during the weekend, we're just going to range here. That's like an estimation, I guess, like an idea. What's the roadmap to become a professional trader? Would you share a list of resources? Well, I mean, there's not really a resource, I suppose, to becoming a pro trader. It's more or consistently profitable. I don't really like the name professional, but more like a consistently profitable. I like that term. But a roadmap is what kind of, I mean, look, I'm not a salesy guy really, but it's kind of like what we do in Diamond. You need a strategy. The roadmap to become consistently profitable is building a consistently profitable strategy. And that is what I help people with, right? So even in Discord here in the updates, why is my here sharing some stuff? Yeah, create your strategy. We got a document here, right? Step by step by step by step. It's already a while ago. Of course, everything is live now. But look, very easily to become a consistently profitable trader, you do this. I swear, you do this. 1. Try as many tools as you can in TradingView. Maybe you like order flow, you try order flow as well. You know, you try XYZ, you do XYZ. But don't buy a random indicator from a random guy that has a green dot and a red dot because you think it will help, right? You still, even if you do that, you still need to build a strategy around that indicator. So it doesn't work. Oh, almost destroying my screen. So try the free tools first, try all the stuff, right? Then find your favorite stuff. Once you find your favorite tools, build statistics on your tools, then combine your favorite tools, which means you're now going to have rules as well because you know statistics of the separate individual tools. So you put those tools together now, your favorite ones, and now you're going to build statistics on the combination of those tools. And then once you build statistics on the combination of those tools, you develop certain rules as well, because based on statistics, you will get the rules as well. And now you can tweak and edit and add something and leave something out and improve it, which then leads to your trading strategy, which then means you're going to trade it. You need to know your win rate, forward test it, and all that stuff. And once you got a strategy that is profitable, which you know based on data, then you work on your mental game mainly. I rarely ever study anything technical analysis related anymore because I don't need it. I have my strategy. I have Elliott Waves. I'm curious. I'm a curious person, so I love to learn new things. But I'm not studying something new to use it because I have my strategy. I have my stuff. I'm mainly studying the mental side of trading and trying to improve myself on the mental side. So you want to become a professional, or I should say consistently profitable trader, you need to have a consistently profitable trading strategy. A strategy that literally equals the quote, same shit, different day. That's where you want to work towards, where you can wake up, you can look at the chart, you can be like, hey, there might be a setup here or not. You set your alarm, you go away. Alarm goes off, you check the chart. If all the entry all the entry boxes, this, right? If all your, this is all document of course now. If your entry requirements are ticked, tick, 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 you enter, right? Because that's based on your strategy and on statistics, you know that you should enter. and that is what will help you to become consistently profitable. It's the strategy around it that will make you become profitable. But most people don't want to put time and effort into creating a strategy. They just buy based on, oh, it goes up, it goes down, or emotions, or they follow some YouTuber, but they don't want to put in the effort. They don't want to learn something. They don't want to, and that's the problem. And you can't keep doing that. So you need a skill set to develop a skill set which is based on the tools that you enjoy to use. And everyone is different. Everyone's strategy will be different because you have a different personality, different lifestyle, different risk appetite, different tools that you love to use. Someone is a scalper, day trader, swing trader. So yeah, you want to develop something that fits you. My strategy fits me, my lifestyle, my way of trading. But the nice thing is I only trade Bitcoin, and for me that's enough. But in the group, in Diamond, the only reason I got an alt setups channel is because holy moly, Diamonds are trading a lot on alts with my strategy. I had no idea my strategy was even usable on altcoins because I don't trade altcoins. But they started doing it. They tracking their statistics, like Jarvis that I showed earlier as well. And they are doing amazing, right? Like Jarvis trades 4 coins with a 70% win rate with my strategy there. It's insane. But it doesn't fit my lifestyle to check different charts all this time because I do all sorts of different stuff. I have another business, I do speaking, I have community, YouTube, right? So yeah, it's you need to find something that fits your life as well. But it's about putting in the time. And everyone can become a consistently profitable trader if you put in the time, and it will take years. Some people take a year, some people take 3 years, others will take 5 years, 10 years. There's in the book Market Wizard, by the way. In the book Market Wizards, a great book, there is a trader in here that has traded for 10 years. He was a losing trader for 10 years, right? And after 10 years, it clicked. And then he made, I don't even want to know how many millions. I think it was at Sequoia. I don't know how many millions he made in the years after. Very good book, by the way, about other traders. So, everyone has their own time span to become profitable. That guy lost money for 10 years and now he's in a Market Wizards book. Or now, I mean, it's already an older book. But he made it in the book after 10 years of losing. But he eventually got there. No. Have a good speech tonight. Thanks. I'm already speeching now. Did you study it by your own? Yeah, mainly. I studied mainly by my own. So I did have a look at different things going on in the industry. But yeah, I never... Yeah. Like you can kind of learn everything online, really. Everything is online. So Elliott Wave. What's up, Abdul Karam? If you hodl, for example, starting November this month, what's your advice on downward price movement below your entry price? What would be your advice on what to do if price goes down? Of course, first of all, no financial advice. But if you hodl, you need a strategy. So my advice is, what is your plan? What's your strategy? The moment you entered for a hodl position, what's your exit? You need to know your exit, right? Where you're going to exit? What's going to be your target? Where you're going to enter? If you see this on the chart, where are you going to exit? Like maybe you see 3 red weekly candles, which is your signal to exit, let's say. Or anything, I don't know, but that's the thing. Like my advice here is, what's your plan? Because I can't give advice. Like I'm not really a hodler or long-term trader, investor. So what's your advice on downward price movement? Of course, it's just part of waves, right? Price moves up and down in waves, so it's all part of all part of what price does. What would be your advice on what to do if price goes down? Yeah, it depends on the plan. If price goes down, then what's your strategy? Where's your, let's say, where's your stop loss? If you're in profit and price dips to a certain level, you need to know where you add more. So it depends on your time horizon. If you hodl, what's your time horizon, right? If you're like, okay, I'm in it for like at least like a year or 2 or 5 years or 10 years, you're not going to sell your bag if you get like a red week, right? Probably even you're going to add more, but you need a plan. So that's the thing. I can't give advice because this is very personal. Some people have no problem with price moving down, and others, out of emotion, sell everything, and then price continues and they're like, fuck. Which is a moment I had in the past. Yeah, I remember that one. So, yeah. Can't really answer the question in detail because it's very person specific. So I actually recommend, when you build a strategy, to start with the $10 and skip on the demo. Because people don't experience psychology problems when trading demo. I currently have a friend of mine who is doing demo trading, a real life friend, and he trades on demo and he constantly makes profit. I'm like, guy, put $100 in your account and then start trading, because it's a whole different game. If you have your own money you had to work for, put at risk. Everyone is profitable in a demo account. You know what I mean? So the best thing you can do is go as quickly as you can to a very, 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 very small portfolio trading account. $10, $20, $50, $100, whatever is small for you. And use that to trade with. And learn, use that as your tuition money, right? Like your school money. You're learning to trade by putting the $10 in the account. Yes, if you like $100, let's say. If you win 1% or lose 1%, it's $1. That's fine, because you're trying to learn a skill set that's going to be repetitive with $1,000 and $10,000 and $100,000. So if you can do it with 100 and you slowly grow your account, you'll be able to use the same skill set with higher money as well, right? But then it's about mindset more, because higher money means bigger losses, bigger wins, right? So you need to be able to cope with that from a mental point of view. So I agree here with the $10. Love your mindset. Pleasure, mate. Pleasure. Thanks for your questions. Do you analyze DXY, S&P 500? No, not like with Bitcoin. Maybe once in a while I have a look, but I kind of only look at Bitcoin, really. Yeah. I do know what's going on there a little bit, but it's not really, I don't really look at it too much. So, any good source to learn Elliott Waves? Yes, in the description. It's all free. It's just the links that I provided for everyone to see what sources I use to learn Elliott Waves, which is 3 bit.ly links, which is just websites, just public websites. Everyone can go there and you can click on them and learn Elliott Waves, especially the second one, the detailed Elliott Wave link. That for me is like, that's the bomb. I think that's the best one. That's this website. Everyone, you know, not affiliated. It's just literally for you guys to see what I used. This one is really good. Read this page from the top here to the bottom here. And you'll be a lot smarter. And make notes. Make notes as well. Try to make notes. Kamran Pariska, what's up, man? How you doing? Good to have you here. Good to have you here. I have a little problem that it's hard to find if the wave is a 1, 2, 3 or an ABC. Oh, you mean this move to the downside? I went over the analysis part at the beginning of the video. Currently, probabilities are higher for price to move to the upside for, I suppose, 2 reasons. And to the upside, for people that enter and are like, hey, you also said that here and we move down. Guys, you know, nothing goes in a straight line, okay? But, and it's time frame dependent. The first thing is that price here hit the 886. Unless this is the high of your wave 4, which still has probabilities, generally, but then you need a W, like an X and then a Y, but your W needs to be a zigzag. Your Y can't be a flat because this looks like a 3-wave structure, not a 5-waver. So yeah, probabilities are higher. This is more like corrective at the moment, but you hit the 886, which by itself is a higher probability that the high is a B or an X here. Increases probabilities, any move down is a wave C or a wave Y, which increases probabilities that later you come back. Now, I don't really like to lose the support resistance area too much. So yes, we still have the impulse scenario here. But then this wave 4 has to end here. But that means your wave 4 is quite long compared to your wave 2. It's not as nice. A, B, C, unless this is a wave 2, but 1, 2, 3, 4, 5. So your wave 4 generally is quite long. But yeah, probabilities, you hit the 886, and the 886 is generally important for the probabilities. So you can see this structure here is already quite a bit longer than what we had here as well. So time-wise, wave 4 tends to be longer, but this is quite long. We do have bearish CVD divergences building. So, you know, lower high on price, higher high on the CVD. So downside expected. Also here, a red candle, but CVD moving up on yellow, right? Bearish in candle CVD. Increasing probabilities to move down. But you did hit the 886, increasing probabilities that later you will come back up. So yeah, but going below the support resistance area, I'm not too big of a fan of going down here, right? So we have to observe. Can this be WX A B, C? Well, preferably that's then like yeah, the problem here is that this is your low here, and if you're in a WXY and your W is more like a zigzag, because this is a straight move up and W can only be a zigzag or a flat, so this has to be a zigzag, then you have X, any correction, and then Y has to be a triangle or a flat. So if this is your X, then if you have a Y, you need to look for an A, B, C in a flat or a triangle. A, B, C, D, E doesn't work because we took the high. In generally, triangle doesn't really work here anymore, right? So, but a flat also doesn't work in an A, B, C, because a C wave is a 5-wave structure. 1, 2, 3, 4, 5, that's fine. But then you retrace too deep and you have overlap with wave 1 in a 1, 2, 3, 4, 5, which then means C is an expanding diagonal, which is rare. Lowers probabilities that this is a wave C ending diagonal structure. So it's quite difficult to end the wave 4 here at the moment, which therefore plays the probabilities again. So yeah, a triangle, could we mention? It doesn't really work, huh? Like A, B, C, D, E, or also all the waves need to be zigzag family structures. So A, B, C, D, E doesn't work. You can't have E up here. So, but a flat also does. It's not nice. This being a 5-wave structure, nah. So yeah, that's the reason for the probabilities at the moment, and we'll see. We will patiently see. Wave C is very long though. It went to the 3, right? So here, where is it? So your wave 3, right? Or C, A, B, C, or 1, 2, 3. Going to the 3 extension is very far for wave 3, right? Or a wave C. For wave 3, the 3 is normal. But for wave C, which is this one, going to the 3 That is not very common, you know, that you go to a 3. It's rare to be that extended as a wave C, even though wave Cs can be quite a pain in the ass and can go very far. But then it's about the retracement that you get. So then it's about keeping an eye on what happens afterwards, right? So yeah. And we just have to wait patiently because we got bearish diffs and we got bullish diffs as well. How are you, Kun? Can you show us how many pull-ups you can do? I could, but I'm not like a circus dog. I can do about, like, if I do in a row with heavier like clothes, I think it's more like 12-ish. So yeah, I like training upper body though. I also trained upper body yesterday, so it's not a great idea to actually go at it. But yeah, 12-ish, straight line. The last, like, you know, once I get to 10, that's when it starts to become difficult. No, like, or starts to become, that is where the next one is difficult. So I might need a little hang and then push again, right? So yeah. Okay, everyone, it's time for me to continue with the day. Stuff to do. Online for a long time, almost 2.5 hours. Got to travel tonight. I got to speak at an event tonight as well. So how is trading these days for you? Fun, neutral? Oh, no, fun. I love it. For me, it's playing a game. It's like puzzling with the chart all the time. So yeah, it's a fun experience. So no, it's always fun. I'm always puzzling. You know, I see it as like playing a game, really, playing a game with the market. So, but yeah, at the moment, bearish CVD looks like price wants to have these play out, but we'll see. 886 touched. Generally, probability is higher for continuation. If you lose the support resistance area, we still have the golden pocket here and the target if price goes down in a C or a Y. Then your target is the 1 to the 1.236. Lower edge of the box, and at the 1-to-1 we also have the 0.5 Fibonacci from the low to the high. At the 1.236 we have the golden pocket just below, right? So those are interesting areas, and yeah, we'll keep an eye on the chart. No, I think my chart sharing is on, so anyone that is interested in keeping an eye on my chart can click on the link in the description. I also still need some voice for tonight because I'll be speaking, of course, as well. Eh? Whee! What a stream! What a stream! Better keep liquid, you know. Holy moly, water is good. Hey everyone, Daniel, you know, Lauri, Lago Caballero, Daba, Adrian, everyone that was here. Thanks for hanging out. Thanks for spending your valuable time on YouTube watching this random guy in a bright red shirt and a black cap doing some you know, putting some random lines and some letters on a chart, and hopefully you're going to enjoy the remaining hours of your Friday. And of course, your weekend. The next update will be tomorrow morning, 7 a.m., because tonight I'm going to be speaking at an event as a keynote speaker, which most of you guys now know, as I've showed my speaking agency profile as well. So yeah, I'll be speaking. I'll be out and about, so I can't make an update tonight, but I will provide one tomorrow morning again. So that is what we're going to do. And we're going to see, like, right, where price is going to be tomorrow morning. And then we'll make a bit of a plan for the weekend. So I look forward to see what the last day of the week will show us. And yeah, let's see if we can have a good weekend as well. With the Las Vegas Grand Prix, don't forget to watch. I'm a Formula 1 fan, so I'll be watching. But The beste thea's op YouTube. Thanks, Dabba. Appreciate it, man. So enjoy your day. Enjoy your evening. Trade safe, as always. Have your plan and your strategy. Don't follow YouTubers, including me, just got to do your stuff. But being part of communities is nice. I do a lot in Discord as well, so you can always tag me in Discord. I'll respond. So anyway, enjoy your Friday, enjoy your weekend, enjoy Formula One. I'll be seeing you very soon again.